Escorts is going to be very much in the limelight on back of its Q1 performance. They will be handing in their report card today, and here's what we at ET Now expect. It's going to be one of the biggest outliers in the automobile space. It's expected to be a strong outperformers given how the others have actually witnessed a massive slump. Being a rural play, Escorts is relatively in a better position, and post the unlocking, they've definitely witnessed a very strong recovery and a rebound of sorts in their volumes and in the demand. They've recorded a quarterly volume of 18,150 units, which is, yes, a downtick if you compare it on a YOY basis, but a 14% contraction at this point in time, given the unprecedented circumstances that played themselves out during the April to June quarter. I would say a 14% compression in volumes is not very, very alarming or very concerning to the market at this juncture. We're expecting the sales figure at 1100 crore rupees versus 1423 crores, down 22.7%. Profits are seen at 75 crores versus 87.5 crores. It's likely to be down a little over 14%. Now, do remember that in the quarter gone by, there were some tailwinds at play as well. There was a strong Kharif sowing. We saw good monsoons as well commence. There was high cash flow because of Rabi crop. There were government incentives and government push in various ways, giving more money and more incentives to the farmers and to agri-based industries as well. So there was strong pickup in demand post the unlocking, which resulted into a comparatively low drop in volumes of Escorts in April to June quarter, like I flagged off, 14% compression only at this point in time, because others, of course, especially the urban plays, the passenger vehicles, the CVs, two-wheelers, all of them continue to be still very, very volatile. ET Now poll also expects EBITDA at 105 crores, which is likely to be down 26%. We're expecting a margin compression as well, owing to negative operating leverage. According to our poll, the margins are seen at 9.5% versus 10%. But a 50 basis points compression at this juncture, I feel, is not a very concerning or a very big deal, because they have been able to make up for the lost volumes and for the losses in the earlier part of the lockdown by the second half of the first quarter, wherein there was a strong spurt in demand. So 50 basis points compression is what we're penciling in right now. But management commentary will be important to watch. How has demand played out in the last 1 month as well? How has July been? Whether or not the similar kind of fervor, the demand uptake and the walk-ins, inquiries, etc. will be sustained going forward as well. So the next 2 to 3 quarters will also be important to watch out for. What the management expects, how the supply chain issues have panned out, whether or not they've been able to iron out all of this, and if there are any challenges at hand as well, important to watch out for